Mabuhay. And welcome back to Financially Smart Pinoy. Today we're going deep on a topic that's super important if you're a Filipino aiming for financial independence.
Yeah, we're talking about mutual funds and UITFs.
Mutual funds and UITFs.
Exactly.
Now, some of you listening might already be familiar with investing in individual stocks on the Philippine Stock Exchange.
Right.
But,
And if you are, you probably know it can be a little bit of a jungle out there sometimes.
oh yeah,
Hundreds of companies to choose from,
Right.
different sectors.
different industries.
And then you've got that board lot system, that minimum share purchase requirement.
Yeah, that board lot system,
It can be really overwhelming.
especially when you're just getting started.
Yeah, for sure. So really for a lot of Filipinos, it's a barrier to entry.
It is. Okay, so we've got over 300 listed companies on the PSE.
Right.
And you mentioned diversification. Let's say, you want to diversify your portfolio.
Yeah.
That would take a whole lot of capital just to meet those minimum requirements.
Absolutely.
Right.
And that's precisely where mutual funds and UITFs come in.
Okay.
They offer Filipinos a much easier way to get started building that diversified investment portfolio.
So how do they do that?
So think of them as like these ready-made baskets of assets,
Okay.
curated by professional fund managers.
So instead of me having to go through this massive menu of stocks trying to pick and choose what I want,
Right.
I'm getting a pre-selected meal.
Exactly. You're choosing a pre-selected meal that's been crafted by someone who knows the market.
Okay, that makes sense.
Now, before we go any deeper into the specifics of these funds, it's really important to understand the main difference between them.
Yeah, let's talk about that.
So mutual funds are managed by investment companies or insurance companies,
Okay.
and they're regulated by the SEC, the Securities and Exchange Commission.
Okay, so that's mutual funds.
That's mutual funds.
Now, what about UITFs?
So UITFs are managed by banks and trust entities, and those are regulated by the BSP, the Bangko Sentral in Pilipinas.
Okay, so we've got our mutual funds, we've got our UITFs.
Yeah.
Different regulatory frameworks, but they both offer, professionally managed investment options.
Exactly.
Now, for our listeners who are just tuning in, who are maybe new to investing, let's break down why these funds are so beneficial.
Yeah, let's do that.
One thing that I always found intimidating about investing was the research. Like, I wouldn't know where to start.
Yeah.
Analyzing financial statements or tracking market trends.
Right.
It's just, it can be a lot.
And, the great thing is you don't have to do any of that. That's the beauty of having these professional fund managers.
Okay.
They do all the heavy lifting for you. They use their expertise to research and select and manage the assets within the fund.
So I don't have to worry about it.
You don't have to worry about it. It frees you up to focus on other things in your life.
Okay, so that's a huge relief. But how do I know which fund is right for me?
Yeah.
I mean, I imagine there are hundreds of them out there.
You are absolutely right. There are tons of funds to choose from.
Okay.
And each of them has its own specific investment objective.
Okay.
They have their own risk levels and target returns.
Okay.
So you've got, for example, your blue chip funds
Okay.
for people who are looking for stable growth.
Okay.
You've got balanced funds that combine stocks and bonds.
Right.
And you even have sector-specific funds. Let's say you're bullish on technology or real estate.
So it's like choosing from a diverse menu.
Exactly.
But instead of appetizers and entrees, I'm looking at different investment strategies.
You got it. Now, let's say you really want to diversify that portfolio,
Right.
but you don't have a whole lot to invest up front.
Yeah.
This is where funds can really shine, especially for Filipinos who are facing those board lot limitations we talked about. You can actually get exposure to a pretty diverse mix of assets,
Okay.
even with a pretty small investment.
So how small are we talking?
So some index funds, for example.
Okay.
You can start with just 1,000 pesos.
So with 1,000 pesos,
Yeah.
I can technically own a tiny piece of multiple companies
That's right.
across different sectors.
Across different sectors, diversification made easy.
That's incredible.
Yeah.
It's a game changer.
It is. It's a game changer, especially for Filipino investors who want to build a resilient portfolio, without going broke.
Right.
Of course, diversification's, just one part of it.
Yeah, it's not just about spreading your money across different investments.
Right.
It's also about aligning them with your goals
Exactly.
and your risk appetite.
Yeah.
So how do we go about figuring that out?
Well, first things first. You need to define those financial goals. What are you saving for? Are you saving for a down payment on a house? Are you planning for your children's education? Or are you trying to build, a nice, comfy retirement nest egg?
Right.
Once you have a good picture of what those goals are, then you can start mapping out that investment timeline.
It's like any journey, right?
Yeah.
You're not gonna start driving without knowing where you're going.
Exactly. Now, along with your goals, you have to honestly assess your own risk tolerance.
Okay.
How comfortable are you with those ups and downs of the market? Do you prefer a more conservative approach?
Right.
This is really important, that self-awareness. It's crucial when choosing a fund that aligns with what you're comfortable with.
So if I'm the kind of person who panics when the market dips a little bit,
Right.
I probably shouldn't be going headfirst into a, high risk, high reward fund.
Probably not.
Right.
There's no shame in starting off a little more conservative. And then you can always, gradually explore those higher risk options as you gain more experience and confidence.
I mean, so you find that sweet spot
Exactly.
where your strategy is aligned with your goals and your tolerance.
Exactly.
All right. So we've defined our goals. We've assessed our risk. What's next? How do we actually navigate choosing a fund?
Okay, so now it's time for some due diligence. You're gonna wanna look into those technical details
Uh-huh.
of each fund you're considering. So we're talking minimum investment amounts. Are there any top-up options?
Okay.
Typical holding periods, and of course, we got to look at those fees and expenses.
Yeah, those fees can really add up.
They can. So it's kind of like, you're reading that fine print before you sign a contract.
Right, right.
You don't want any surprises down the road.
No surprises.
No. So how do we evaluate these details?
Yeah.
Right? And how do we compare the funds?
Yeah, how do we do that?
Well, it's crucial to understand how those fees and expenses are going to affect your returns over time.
Okay. Yeah.
So, for example, actively managed funds, those usually have higher expense ratios compared to passively managed index funds.
Okay.
You also want to look at the historical performance of that fund. Keep in mind, past performance, it's not a guarantee of the future.
Right.
But it can, it can give you a little insight into the fund manager's track record.
So I'm checking a restaurant's reviews before I make a reservation,
That's a great way to think about it.
right? Just seeing what other diners have experienced.
Exactly. However, just like restaurant reviews, you got to consider multiple sources.
Right. Don't rely on just one.
Won't just rely on one. You also want to consider that institution's reputation and stability,
Okay.
whether it's an investment company, an insurance company, or a bank.
Right. Whoever's managing that fund.
Exactly.
So it's about doing your homework.
Yes.
So weighing those pros and cons and making that informed decision
That's right.
based on your own personal circumstances.
Exactly. And if you're feeling a bit overwhelmed or maybe lost in all the jargon, remember, there are resources to help you.
There are.
A lot of financial institutions offer free consultations
Okay.
or educational materials. They can really guide you.
And you can always turn to reliable sources like Financially Smart Pinoy.
Absolutely.
That's what we're here for.
That's what we're here for.
To give you the knowledge, the tools
Right.
to make those smart financial decisions.
Exactly. Now, for anyone listening who's thinking, okay, this all sounds great, but how do I even begin to open an account?
Yeah.
Let's demystify that process.
Let's do it.
Okay.
So we've talked about what mutual funds and UITFs are and why they can be so beneficial.
Right.
But let's get practical.
Yeah, let's do it.
Where do I go, how do I actually open an account and get started?
Well, the good news is that getting started with a UITF can be pretty easy, especially if you already have, an existing bank account.
Okay.
A lot of banks offer UITFs directly through their branches or their online platform.
Okay.
And you can usually get started with a pretty low initial investment.
That's good.
Which is great for people who are new to investing.
Yeah, they're just starting out.
Exactly.
So I could just walk into my bank, open a UITF account.
Yeah.
And that's it. I'm on my way to a diversified portfolio.
In a lot of cases, it can be that simple.
Wow.
You'll want to, do your research on the specific UITFs offered by your bank, make sure they align with your goals and risk tolerance.
Right, always. We don't want to jump into anything without doing our homework.
Great.
But okay, let's say I'm interested in exploring a wider range of fund options, maybe from different investment companies.
Yeah.
What's the process like for investing in mutual funds?
So for that, you would typically need to open an account with the stockbroker.
Okay.
or a mutual fund company. So they act as kind of like intermediaries, allowing you to buy and sell those shares of different mutual funds.
Right. Yeah.
The application process is pretty straightforward, usually involves, providing some personal information, completing some KYC requirements, know your customer,
Right.
and funding that account.
So a little more paperwork, but it
Yeah.
opens up more choices.
It does. It gives you a lot more options.
Okay. Now, you mentioned that past performance isn't a guarantee of future results,
Right.
but it's still something that I'd want to consider when choosing a fund.
Of course.
So where can I find reliable information on that past performance data?
You can find that on, reputable financial websites, business publications,
Okay.
even on those fund management companies' websites themselves.
Okay. Makes sense.
They often publish that data. You can find information on the fund's returns over different periods, like, 1 year, 3 years, 5 years.
So I can get a sense of, how the fund performed in different market conditions.
Exactly.
But I imagine there's more to evaluating a fund than just looking at past returns.
Oh, absolutely. You really want to dig a little deeper, understand the fund's investment strategy.
Okay.
What kinds of assets are they holding?
Right.
The fund manager's experience, and any fees associated with that fund.
Yeah, don't hesitate to reach out to financial advisors.
Yeah, good point.
Or even, do your own research to really get a full understanding
Yeah, absolutely.
before you invest. And speaking of fees, those can really eat into your returns over time.
They can. That's why you really want to pay attention to that fund's expense ratio,
Okay.
which is basically representing the annual operating expenses as a percentage of the fund's assets.
So, like actively managed funds typically have those higher expense ratios.
They do. They do. And that's because of, the costs associated with that active stock picking, the research.
So if a fund has an expense ratio of, let's say, 2%, that means 2% of my investment's going towards fees each year.
That is correct.
And while 2% might not seem like a lot, over time, that can really add up.
It really can.
Right.
And that's why a lot of investors, especially those with a longer term investment horizon, they'll often opt for passively managed index funds,
Okay.
which usually have lower expense ratios because they're just aiming to replicate that specific market index.
Okay, so lower fees, potentially higher returns in the long run.
Potentially.
Something to keep in mind.
Yeah.
Now, you mentioned earlier, for those listeners who are a little more adventurous,
Right.
they want to have more control over their investments,
Right.
that stock brokerage account.
Yeah.
Could you elaborate on that a bit?
Sure. A stock brokerage account basically gives you direct access to that stock market.
Okay.
So you can buy and sell individual stocks, bonds, even other investment products like exchange-traded funds, ETFs.
So it's like I'm my own portfolio manager.
You got it.
I get to pick and choose exactly what I want to invest in.
You do. It offers, a higher level of customization and control.
Yeah, a lot more control.
But it also requires more knowledge, more research, and more active management on your part.
Okay, it sounds like a lot of responsibility.
It is. It is.
What are some things that potential investors should think about before they open that brokerage account?
So first and foremost, it's super important to have a solid understanding of fundamental analysis
Okay.
and technical analysis.
Right.
This means evaluating companies, based on their financial statements,
Okay.
market trends,
Ah.
industry outlook, all that data.
So a lot to learn.
Yeah. You also need to develop a good risk management strategy
Okay.
and understand how to use different order types to buy and sell those stocks effectively.
A whole new world.
Yeah.
But for those who are willing to put in the time and effort,
Yeah.
and they want to manage their own portfolio,
Huh.
it can be pretty empowering.
Absolutely. It allows you to really tailor those investments
Right.
to your specific goals,
Mm-hmm.
risk tolerance, and investment philosophy.
Now, before we get too excited about picking stocks and managing our own portfolio,
Yeah.
it's important to remember that investing, whether it's mutual funds, UITFs,
Right.
or individual stocks,
Yeah.
always carries some level of risk.
It does. That's a key point. While diversification can help manage that risk, it can't completely eliminate it.
Right.
You got market fluctuations,
Right.
economic downturns, even, company-specific events.
Right. You never know what could happen.
Exactly. All of these things can affect the value of your investments.
So it's not a guaranteed path to riches.
No, it's not.
There is the possibility of losing money.
There is. It's really important to approach investing with a realistic mindset, understanding that there is that potential for growth,
Yeah.
but there are risks involved as well.
So how do we navigate those risks? How do we make, those informed decisions?
Well, one key principle is to invest for the long term. Those short-term market fluctuations, they're inevitable.
Right.
But if you look at it over the long run, the market tends to trend upwards.
So ride out those waves. Don't panic when things dip a little bit.
Exactly. Patience and discipline are really important when it comes to investing.
I imagine so.
It's also important to diversify, not just across different asset classes,
Right.
but across different companies, different sectors.
Don't put all your eggs in one basket.
Don't put all their eggs in one basket. Now, for anyone listening who might be feeling a little overwhelmed
Understandably.
with all this information,
Yeah, it's a lot.
what's the best way for them to start their investment journey? Should they just jump right in or take a more gradual approach?
Yeah, that's a good question. It's like anything else, right? Like you don't just become a master chef overnight.
Right.
You got to start with simple recipes, learn the basics, and then gradually, expand your skills and your repertoire.
I agree.
Same with investing.
Absolutely.
There's no need to feel pressured to just dive right in.
Yeah, just start with what you're comfortable with.
Right.
What aligns with your current financial situation.
Mm-hmm.
Even small, consistent investments can make a big difference over time,
Right.
thanks to the power of compounding.
Yeah, compounding, that
Yeah.
that magical
Very
thing
nice.
where your returns generate even more returns,
Yeah,
like a snowball effect.
exactly, for your investments. And for those who might be a little hesitant to go it alone,
Yeah.
there are resources out there to help.
Good.
Financial advisors can help you create a personalized investment plan
Yeah.
based on your goals, your risk tolerance, all your financial circumstances.
So they can kind of be like your financial coach,
Exactly,
Yeah.
guiding you along the way.
giving you the advice and the support you need. But even with expert advice, it's still crucial for investors to stay engaged and to monitor their investment.
Right.
Right.
You got to review that portfolio performance regularly.
Right.
You got to understand, what are those factors that are influencing its growth or decline,
Right. Right.
and make adjustments as needed.
Okay.
It's part of being a responsible investor.
So it's not a set it and forget it kind of thing.
It's not.
You have to stay on top of it.
You do.
Okay, so let's say, you've been investing, you've been monitoring your portfolio, and things are going well.
Yeah.
How do you know if you're on track to actually reach your financial goals?
That's where tracking your progress comes in.
Right.
We got to revisit those financial goals every now and then and really assess, is your current investment strategy still in line with those goals?
Okay.
Life changes.
Yeah, things happen.
Priorities shift, and you might need to adjust that investment approach.
So it's not just about watching the numbers go up.
Right.
It's about making sure those numbers are taking you where you want to go.
Exactly.
Yeah.
And remember, that journey to financial independence, it's a marathon.
Right.
It's not a sprint.
It's a long game.
It
Yeah.
requires patience,
Right.
discipline,
Right.
and a willingness to keep learning and adapting.
And that's what we're all about here at Financially Smart Pinoy.
That's what we're here for.
To give you that knowledge.
Yeah.
To give you those tools.
The tools to navigate.
To help
Keep
you
exciting.
navigate this sometimes challenging
Been challenging.
world of personal finance.
That's right. We're here to support you every step of the way.
We are. So as we wrap up this deep dive into mutual funds and UITFs,
Yeah.
we really hope you've gained, a clear understanding of these investment options
Right.
and how they can help you on your journey to financial independence.
That's right. Whether you're just starting out or you're already a seasoned investor.
Right.
Just remember that the key is to stay informed.
Okay.
Make those thoughtful decisions
Uh-huh.
and never stop learning.
And speaking of learning,
Yeah.
we want to leave you with a question to think about.
Okay.
As you continue your financial journey.
Yeah. What is it?
What's one specific step that you can take today,
Right.
no matter how small,
Yeah.
to move closer to those financial goals?
I like it.
Maybe it's researching different mutual funds.
Right.
Maybe it's scheduling a consultation with a financial advisor.
Oh.
Or maybe it's just setting aside a small amount to start investing.
Yeah, every journey begins with that first step.
Exactly.
What will yours be?
Muramang Salamat for joining us on this deep dive.
Yeah, thank you.
Well, we'll be back with more insightful discussions on personal finance,
Absolutely.
tailored specifically for us Filipinos. Until next time, stay financially smart.
Stay smart.